What's up, everybody? Welcome to Froggy Stocks. Nothing I say is financial advice. It's entertainment purposes only. I'm not a financial advisor. I haven't been on in a while, so wanted to jump back on, talk about a few things. Really more of a review. I have been less active lately because we've identified basically everything that can or will happen for the most part, besides any surprises and catalysts for AMC, Hycroft, and GME. We have 14032 executive order going into effect June 3rd, which will limit Chinese securities from being used as collateral to meet margin requirements for U.S. companies. Then we also have the 606 order from the SEC talking about more trade and transparency in brokerages and their order flow. Then we have the GME GameStop dividend stock split coming up in June also. Super interesting. I do believe Hycroft might have a new catalyst coming up after Diane Garrett was at the London Mining Expo. More than likely, they found some new investors. I'm waiting for that. But also, I saw a video on YouTube with Diane Garrett from Hycroft talking about when AMC and Eric Sprott exercise their warrants, they will own over 50% of the company. So that's huge. That's a really big deal. This week's about the same as every other week. We're sitting here, we're watching Max Payne levels. AMC and GME have had a phenomenal run the past 3 days. Really, really happy with where we're sitting right now. I still think people need to stay out of the weekly call options. I think any call options that are bought that load up on certain strike prices, say like $13.50, $13, make our new ceilings, because that gives incentive to market makers to steal those premiums out. So when people start buying strikes, on the week for call options that are around certain levels, and I'll bring it up here in a second. Here we go, May 27th, 12, 13, $13.50, $14. People started piling in around this $13 range, right? So right now, if I was a market maker, I would look at this and I say, man, we can't let 30,000 call options land in the money above 13 bucks. We're going to have to pin it below 13, right? And that's kind of where we're headed today. Look at that. 1303 on the dot right now. They're going to let this play out, and they're going to try to suppress it below that 13 range so they can steal those premiums, take that money. They make the market. They get to cover shorts really cheap on top of stealing those premiums. They're using your money to cover the shorts. And in theory, trading options on AMC and GME, unless you're exercising, is no different than being a paper-handed little bitch. Yes, I said it. That's exactly what it is. That was the whole thesis behind this play. Buy, hodl, don't paper hand. And then people started becoming these options experts, offering master classes and all this stuff. Look, I like options. I'm going to be playing a lot more options when this is all over. But for the time being, I'm worried about the health of the whole instead of my own pocketbook. I could have been playing these the whole time. I could have been selling covered calls since 70 bucks, making a killing. But I want to win the true play. It's not about just putting a couple bucks in my pocket each week. It's about the squeeze. It's about the moass. It's about these hedge funds and these market makers that need to be taken down for the greater good of overall humanity. So just think about that when you're playing these calls, man. If you lose on your calls, you're funding these market makers that are suppressing our stock price. You're creating the ceiling by buying weekly calls around these strikes, or even further out. There's probably a bunch of options out at $30 and $40 again. Retail would benefit the most from buying and holding raw shares and DRSing at least 20% of those shares. Every share that is direct registered, DRSed with computer share, cannot be lent out. So in turn, you're taking shares that could be lent out, you're registering them, now they can't be lent out and shorted. Cost to borrow is going to increase, and short interest is going to increase. And I'll tell you why. When you have a pool of shares and you're loaning them out to somebody to short, you're making, 1-2% off them maybe. Well, if retail comes in and says, no, we're taking these shares that you're loaning and we're going to direct register them because we own the float, then the company who was loaning the shares has to increase the cost to borrow to make up for the loss in volume. they're loaning less shares, so they got to put cost to borrow up so they make more money, right? That's how it works. That's why cost to borrow is going up on GME. That's why it's going up on AMC, because GME, they've direct registered like 12 million shares. I'm starting to think that AMC is probably getting close maybe to 10 million, maybe. I don't know. But again, every share you DRS can't be loaned out. It's plain and simple. If we DRS'd at least 70% of the float, that would probably give Adam Aaron and AMC legal standing to go in and say we have no faith in share management, because if we own 90% and we DRS 70 and institutions supposedly own 36 and insiders own, then you're over the limit already. We already know there's more shares out there than were legally issued. The only way to prove it without somebody coming in and saying Adam Aaron was trying to force a squeeze is by direct registering shares. I have a feeling out of the 4 million shareholders for AMC, the average is probably closer to 500 shares a person instead of the 120 that they announced. I'm pretty sure it's probably closer to 500. So in theory, if everybody only did 20%, boom, we log the float, we walk away, we win. Adam Aaron goes to court. That too, you can also buy shares directly on computer share. If your broker's going to charge you $100 to transfer, I would just go to computer share and buy some more shares directly from the site. Super easy to do. All you got to do is click the investor link, buy shares, AMC, put your order in, and it'll actually create your account for you after you do the order. And that's computer share. You can find the link on the investor relations site for AMC. They are the official registered transfer agent for AMC theaters, and you can find their information right here at the bottom of the page. Bing bong, right there. Boom. So yeah, either way, I think we're going to drop in below these max pains today. We're going to have Hoyles kick in. Honestly, man, if it dropped back below 12, I wouldn't be surprised, which I hate saying because I think I really want to see this stock above $13. But the Hoyles method, highest open interest on the lowest strike, is telling us $12. Sucks. No, I don't think there's any trading on Monday, Memorial Day, but we still had a good week. We still had a lot of positive pressure on the stocks all week. We're in the green. Charles Gasparino didn't know what to say when he was on whatever TV show he was on selling snake oil the other day. So hopefully we come out of this. We're still in the time frame that we were last June, where we had the massive breakout. We're looking really good. We came out of the descending wedge. This is May 24th. We had the nice March 31st run up. But check it out. We're right here. This was last year. This was our little run, and then dipped, and then we went to 77. Now we're at that same time frame. We're going on a little run. Wouldn't be surprised maybe if this was the little dip already. And then Tuesday, I really expect us to have some breakout news. Not news, but breakout action. Hopefully some good catalysts come in on the side for Hycroft, GME, and AMC. Again, June 3rd, 14032 executive order limiting Chinese assets as collateral for American companies to meet margin. GameStop dividend proxy vote split June 6th, I think it is. I might be wrong on that. And then at the same time, or June 9th, AMC and Hycroft both have their annuals, which there's also another proxy. So lots of stuff coming up in the next 2 weeks. I'm not on as much as you guys have noticed. I'm just kicking back, relaxing my mind, taking care of some other things, enjoying my time while this plays out. Because when this thing does squeeze, everybody's going to be super, super excited, overexcited. They're going to make bad trades trying to go in and out of the play. I'm going to come in calm, cool, collected. If we do experience a big squeeze, I'll start streaming it. You guys will be able to see what I'm going to do during the squeeze step by step. And I'm going to be completely transparent about it. You're going to see when I'm ready to sell. You're going to see how I want to sell. I'm not telling you to copy me, but at least you'll be able to see somebody doing something live so you can plan how you want to do it for or against the way I'm doing it, which gives you another data point. Anyways, you guys have a great day. Have a great weekend. Be safe, man. Don't get out there and drink and drive and hurt yourself. You guys are way too important to this play. We need all hands on deck. We need everybody in the game. tweeting, going to the movies, everything. Make sure you go see Top Gun. Oh, let me show you the popcorn thing. It's super cool. Yeah. The Top Gun officially licensed popcorn tin. It's like super sweet. It's got all the rivets and all the handles and the no step and the little bomber window on it. It's totally worth getting, man. Guys, definitely go see Top Gun. It was one of the best movies I've seen in a long time. Everybody in the audience was going, ooh, ah, and holy fuck. Like, it was a great movie. You guys will love it. Go to the movies, get the popcorn, go to GameStop, pick up a video game. We're the consumer, we're the investor. We have all the power. Don't forget that. You guys have a good weekend. Froggy Stonks